What's going on, everybody? It is January 13th, 2024, day log episode over NQ and the live stream review. So today was a really good session to me, at least. I know for some people it may have been a little bit more difficult or at least harder to sit through, especially as a newer student. If you're seasoned, then I think it was a little bit easier. And these type of days are always the hardest to teach in my experience because days where I already have outlined that it's low probability and the likelihood of me taking a trade is very little, uh, but there's still going to be movement. There's still going to be models that appear, and people are asking why I'm not trading or why I don't consider it and why I may not want to enter into it, even though I see maybe some logic behind it. It's difficult to put into words, but the easiest way I can state it would be looking at something like today. If you were to put it across not just a year time frame, a couple year time frame over, let's say a 5 to 10 year time frame, even 15, 20 years, the likelihood of actually being able to trade successfully in that environment would be very little, right? So I could probably get some of these days, I could be profitable in some of these days a few times, a, a month or even a year, and that's cool. But the flip side of that is I'm also going to be losing in these sessions. So the likelihood over a long period of time of being successful and profitable in these is just not a high rate to me. So even though I could see some short-term trades, I could see some models playing out, I could see things being respected and certain liquidity being tapped. I would just elect not to trade it because I know the likelihood of something playing out in my favor is not as high as just waiting for another day where I could find something a little bit more in my favor. So that's what I would look at today as, if you're wondering, is looking at a long-term vision view over a short-term vision views and looking at it as I have to trade today. So based off of the weekly forecast yesterday, we dropped off really quickly off of the Monday open, or at least Sunday as well. And that was another reason why I was a little bit weary of today. And I want to reiterate why today was low probability. And one would be the economic calendar with no news event drivers on a Monday. That's a generalizational rule. If you come into a week like that, expect lower probability conditions right off the bat. If you have major news event drivers ahead of you, like CPI, we have core PPI tomorrow, but most importantly, CPI on Wednesday, price can be a little bit less probability wise the days before because price will want to engineer liquidity before a major news event driver like that. So NFP, FOMC, CPI, those are really the three main big ones that you have to be paying attention to. It's not just all red folders, it's those major news event drivers. So I already knew going into yesterday that today was going to be low probability, and the likelihood of me taking a trade would be very little. And you saw a lot of people fidgeting and spazzing out throughout the session, trying to figure out why I wasn't trading or why they couldn't trade or whatever it may be. And that's something, again, I understand as a newer student. I felt the same way, but hopefully you're learning and saw the conditions that you saw today compared to a good day. Today was very, very difficult to trade in. So you don't want to be forcing yourself into a condition like this if you don't have to. What's the point? I don't want to spend the mental capital to do so. If I wasn't live streaming or teaching, I probably wouldn't have been even looking at the charts. I would have saw it and left the screen. So um, based off of today and what we did, we closed off here and we left a sell side imbalance, which is resting above us. And based off of the weekly template, at least what I'm looking at for the week, I am looking for lower prices. I am looking for the sell side to be ran down here. But in terms of, remember the teaching point yesterday, in terms of power of three, meaning open, high, low, and close on the weekly candlestick, we still really haven't printed a high yet or really had manipulation to the upside. And if I'm looking for lower prices, I really want to see that manipulation to the upside before I can start really trusting the real move, the real side to unfold. So a point of interest that I would look for price to react off of would be looking at this previous week's wick. I'm looking at about, or 71 is it, that would be about 25 or 75%, and the 50% of that, basically the midpoint of that wick is where I would like to see some manipulation play out before we see an expansion lower. And it's another point, especially with if price just immediately unfolds one way off the rip, into a week, you have to be very cautious of that going into a Monday morning session, because the likelihood of that continuously pressing in that direction is probably low. They're probably trapping a lot of people before they have some type of reverse on liquidity, whatever it may be. So in here, we have that sell side imbalance, and this would be your mitigation block on a daily time frame. So that's coupled within it. We have this mitigation block, and with that sell side imbalance resting basically inside of it. So we'll see. Tomorrow, I'm very weary of trading. I'm very, very much in because of CPI on Wednesday. Price can get really, really wild tomorrow. Doesn't mean that there can't be a short run. Doesn't mean that I can't engage with price, but I'm a lot more on standby in terms of engaging versus when there isn't a major news event driver ahead of me. It's much like today. I'm very cautious of it. Doesn't mean I can't trade or put risk behind it, but if I just don't see the conditions right, then I'm not going to force the trade. Again, I'm not just looking at it day by day and thinking, well, the model worked today. I saw the run. I could be a part of it. I'm looking at it saying, could I do this over a 5, 10, 20-year span successfully? If I don't generally believe that I could do it, successfully, then I shouldn't be trading that condition, that model. I should just sit out of it and just say, look, I can't trade this model. A lot of people have egos and think that they're the best, and so did I. And you eventually just get your ass handed to you so many times, you eventually give it up and say, look, like me, I'd rather just sit out of it and wait for the condition I know that's right, which is after CPI. To me, it's just free reign. After CPI releases, then I have free reign to look at the market through a little bit different viewpoint, which means a little bit more high probability. Um, if you look at the 4 hour time frame, there isn't a whole lot of points of interest in terms of retracement wise, in terms of if you're looking for a bearish retracement for an expansion lower again, I don't see a whole lot in here in terms of where price could retrace into. There just isn't a whole lot. What I mean by that is if there was like a little bit better structure in terms of inefficiencies or something like that, yes, is there a fair value gap that is resting here that's technically resting inside of this premium, right? This is from that dealing range high to low. You have an inefficiency that's resting there. But anytime you have clean buy side, which on the hourly I'll annotate, there's a clean relative equal highs, which are resting right above that inefficiency. I'm a little bit more weary in terms of trusting that. I would have to see how price trades inside of that. Um, this mitigation block is quite large, so I would like to see the reaction inside of that. It's quite large in terms of its range. We could travel over this sell side amounts, run out the relative equal highs, and trade into this deeper premium before selling off again. That's another idea as well. Again, if you look at the hourly time frame, these relative equal highs stick out very, very cleanly to me. And we'll just see how we trade. I mean, if we get into this imbalance up here, that would make me very weary. Anytime this goes for any situation where you have an hourly imbalance like this or any imbalance, that you're looking to trade, right? We're looking for lower prices, but if price gets into that, we're near in proximity to those relative equal highs, and that does make me weary, especially if I was trying to short it. I would have to watch the reaction off of that, and I would have to see some real movement in order to trust that we would leave the relative equal highs. How would I know that? Well, S&T would help. If ES took out these relative equal highs and NQ left it, that's an S&T in the real moment of time. If I see the displacement, then I would trust it lower. But overview of today, I mean, there isn't a whole lot to talk about. In real time, if you watch the live stream, you would see me annotate a lot of runs or a lot of PD rays on the 1 minute time frame. It's good tape reading. That's all it is. But in terms of trying to trade it, there just isn't a point. And that's what I'm trying to drive home is yes, you can be the best ICT knowledge book trader ever. Trust me, I know every single thing that he's basically ever taught. And I know very well how to trade these concepts, but there's just nothing that you're going to learn that's going to allow you, in my eyes, to trade this type of condition successfully. Not just today, I could do it. I definitely could have found a run today, but I don't need to do that because I'm looking at it again through a long-term vision view. That's just my perspective on it. And that's my advice. I'm not going to tell people to be trading this. Um, to throw it, throw other things inside of this formula as far as low probability, if you have liquidity on both sides of the board that are equally, in terms of arguments, valid, then I won't really want to be pushing in that environment either. So if you look at today, um, to really get a full understanding of today's session, going through the live stream is really going to help. These are actually a little bit harder for me to annotate in terms of after the math because it's a lot easier in a real time to show the condition. But today we're trading kind of aimlessly in here. This is the open as we go into the macro. We take out internal sell side, leave external here, relative equal lows. I remember there was S&T between ES and NQ. That was a bullish divergence, which gave the move once that completed to this buy side liquidity level. And that's what I'm meaning by if there's liquidity on both sides of the board, trying to short or trying to long before this liquidity pool is tagged or before this one is very low probability because you don't know in this moment in time that's going to reverse. I mean, you could have, and you could have taken the chance, but I think it's a little bit of luck. I'm not going to state in here that that's a high probability model. In here to state again, it may have worked today and you may feel great about the trade, and I'm not trying to, put you down on it. But to me, when you're trying to operate in something like this over a long period of time where you may not see it in terms of looking at the model, it may look like a beautiful model, but when you look at it through the lens of, well, there's an argument definitely in real time that price could have ran out the sell side liquidity in here, even though we displaced higher and it left this buy side imbalance and we reacted off of the first presented FEG, we came back down into it, we expanded higher off of it. The fact that there's liquidity on both sides of the board, and with Monday with no news event drivers ahead of major ones, there is such a low probability that that will play out over a long period of time. It may work today, it may work another time, but will work out over a long period of time. There's going to be another time when you try to operate in this exact same condition, exact same model, and this ends up failing, drops lower, takes out sell side, and you end up getting stopped out. And to me, I've done that too many times to be willing to try to take that chance on it. I would rather let the run happen because it doesn't affect me. I understand that there's another day where there's going to be higher probability, there's better variables there for me to operate in, and I don't have to be willing to take that loss. It's just not worth it. After we had that run higher, we come into the macro, which is a good study at high resistance. It's also a high resistance profile. Between 950 and 1010, we get this run here, right? Where we expand away from this buy side imbalance. We make a market structure shift higher. We drop down into a mitigation block. We have a discounted buy side imbalance. I annotated this entire run, even on a seconds chart. When we left this mitigation block, I said, watch your 15-second chart. I still have it marked up, 15-second chart. Watch for this run to the buy side liquidity pool. And we had it. And then we had eventually had this drop lower where we failed to even take out the sell side liquidity, right? I annotated all this. If you really want the full details, I think I did a great job during the live stream of annotating and tape reading this, just so people would understand. But after this happened, we drop lower. We come back up into this sell side imbalance, which is resting right here. We have the sell side imbalance. We come up into it, react off of it. We also have a bearish breaker. We expand lower, and guess what? We fail to take out the low. Why? Because we're in a high resistance profile. It's low probability conditions, and it's unlikely to have smooth, easy runs. That may be an easy, smooth run to you. And even ICT traded this. I saw in the private group he traded this. Does that mean that I have to trade that again? No. Do I see the run? Did I see the run possibly happening during the moment of time? Yes. But it does not mean I have to trade. It's such a difficult thing to articulate to some people, I think. And I would probably have a hard time understanding it as well as a newer student. And I'm not saying that, what I do is absolutely perfect, but it's what's kept me profitable. And I'm just trying to explain my perspective on it. I know that other days where there's cleaner, better runs are going to be a lot easier to operate in. So if you look at the whole view of today, it wasn't very beautiful. Like you can't argue with me on that. I mean, I know some people will, but in my eyes, this is it's very ugly. It's very lethargic, very difficult to be in. There's a lot better days that are a lot cleaner, easier to be a part of. So that's my perspective on it. This is a new day opening gap that presented today, which is right within the new week opening gap. Go figure, it's right inside of it. So we'll see what tomorrow presents ahead of CPI. And until tomorrow, good luck and good trading, everybody. Be safe.